Good afternoon and welcome to the session on bank connectivity using APIs and open finance. From wherever you're joining us today, we've got over 70 different countries and over 2,000 people, so welcome and namaste. Well, I hope you've been enjoying the program so far. I was particularly interested by an earlier session on using SaaS for working capital solutions, and I definitely enjoyed yesterday's session listening to the Archbishop of Canterbury recording tales of hedging FX risk, which you don't say every day. Well, APIs are in the news a lot, especially in the context of open banking and PSD2. I know that I use APIs in my own personal banking arrangements. So, for example, I use Yolt to aggregate balances from my own personal bank accounts. But I know in conversations with treasurers, I don't get the same level of interest or passion. Are APIs a solution looking for a problem? Well, joining us today are a couple of folks from NatWest and the Chief Commercial Officer for a company that uses APIs to deliver solutions to its clients. And between them, they'll share their insights and how treasurers can take advantage of what's available and what's being planned. Now, before we get going, a bit of housekeeping. So we're running a Q&A throughout this session, so don't feel you have to wait until the end. Please post questions as we go along. And they are kept anonymous, so please be frank and open. This session is being recorded, and once the event is finished, you'll be able to return to it and spot any deliberate mistakes that I have made. We've also got a discussion forum going on to last the rest of the week. Please feel free to post any questions on there. We really want to create a debate. APIs is something which we're all going to be facing, and it'd be good to get some conversations. And of course, we're on social media, on Twitter, on LinkedIn with the hashtag FTTACT. So before we get going, a few introductions. I'm Naresh Aggarwal, and over 30 years of working Treasury. I now provide policy and technical support here at the ACT. And joining us today, we have Conor Maher, Head of Transaction Banking at NatWest, Dan Globerson, Head of Open Banking, and Kevin McCallum from Free Agent. Now, Conor's the Head of Transaction Banking at NatWest. He's an accomplished Treasury professional, and he spent 7 years as Head of Banking Treasury Operations for Europe, Middle East, Latin America, and Canada at Hewlett-Packard. Joined the bank in October 2009, and he's a fellow of the ACT. Dan is the Head of Open Banking at RBS with over 28 years experience working at the crossroads of banking and technology, working with some of the world's leading financial institutions in the US, Switzerland, and the UK. And last but by no means least, we have Kevin, who joined Free Agent in 2010 and is the Chief Commercial Officer. And he's got 25 years experience of the UK's banking and accounting software industries, focusing on supporting and working with small businesses in areas of finance and technology. At Free Agent, he's responsible for all commercial engagements between the business and the wider NatWest Group, as well as relationships with all external distribution and integration partnerships. Kevin, I hope I've got all of that right. So I was going to start with Dan. Dan, for those of us who are new to APIs, can you tell us a bit about them and how they're used?
I'd be happy to. Apologies. Thank you. And thank you for the invite, Naresh, and to all the organizers of the event. So APIs, for those who are a bit techie out there, and there's always some, particularly those with a quant background, the concept of APIs are really application programming interfaces. The terminology was effectively invented around the late 60s. And I think what's changed through time is that while APIs originally were a way to describe connectivity between a few different systems or platforms, in modern times, APIs are really about ecosystems and connectivity. And open banking has seized upon the API concept as standardized or semi-standardized interfaces to provide payments, to provide account information, and far more.
So it isn't actually something that's new then, because I always thought they were only about 5 or 10 years, and it's something really, created in the 21st century.
No, actually, it's a good question. Actually, it isn't new. I think what is new is recognition that many modern digital businesses, and I'll use Amazon as a great example, have effectively built themselves off the back of API ecosystems. So when they built up their capability from being effectively an online bookstore, and a good one at that, but in turning into a fulfillment center for anything and everything for all. That was effectively done through building an API ecosystem to connect with merchants, to connect with shippers, et cetera, et cetera. And that's what we're seeing. We're seeing in the digital world, APIs have taken on a prominence which they didn't have previously, Naresh.
And we talk a lot about APIs in the context of PSD2, which is a very European concept. We've got a lot of people from other regions across the globe. Are they seeing APIs in their own economies and countries?
Clearly, the digital economy is built on APIs. All the largest fintechs and digitally active companies build on them. We just don't talk about them very much. I think where we're hearing about it more in Europe is we've been a bit more prescriptive about open banking compared to our friends in North America or in Asia. And we've actually prescribed APIs as a modern way to connect. And that's a little bit of differentiation. Some of the other countries and regions, which we speak to regularly, are talking more actively around whether they wish to prescribe a similar outcome. And
is this, you talked about a lot of different APIs being used and being sort of organized in other sort of jurisdictions and countries. Does that mean we've got a whole load of different competing standards in place?
Well, I think even within Europe, that's the case. So realistically speaking, of the probably about 8,000 financial institutions that fall within this kind of regulation across Europe, there was only a regulatory mandate in the UK for 9 of the largest banks to form a standard, form a directory around it, operating principles, and the rest. And that wasn't under PSD2 per se. That was under our Competition and Markets Authority here in the UK. Other banks across Europe under PSD2 can apply a standard or don't have to. So we are finding some coalescing around a variety of standards. One, the UK Open Banking Standard. In Europe, we've got a Berlin group's come up with some standards. There's a STET standard also in Europe. Spain's got some standards, but truth be told, there are a fair number of competing standards. And there is some discussion, Naresh, about bringing those together under a more global standard, at least European standard. And I think we'll need to see how that works its way through over the coming 12, 18 months, I'd say.
So it sounds a bit like ISO 20022 as a banking standard. Does that mean we've got a long way to wait until we start to see a bit more, as you call it, the coalescing under a sort of a few key standards before we actually start to use them properly?
Yeah, and I think that's interesting in that we don't need to wait. So those who are deeply ingrained into this emerging open banking ecosystem have managed through a variety of standards. And truth be told, there's a fair number of technology-focused fintechs who have come up with solutions to deal with that. And some of those fintechs effectively aggregate across all of the different banks. And so those standards become invisible to the end user or the third party so that they can interact without having to become familiar with each and every standard. And to be honest, there's probably about 10 or 15 of those fintechs out there now in that space.
Okay, and then just sort of picking up a bit more on how it's operating in the UK, one of the things I heard from, I think, last year was that the sort of traditional banks, including banks like yourselves, have been dragging their heels, delivering the regulatory requirements. Is that how you see it, as very much the regulators forced you to deliver, and you're just delivering the minimum requirements of the regulations?
So quickly with a hot question. It's an interesting question. So I think different banks are clearly on a variety of journeys, and not just banks, anybody involved in payments that falls within the regulation. And I think that some of those journeys are quite complex because legacy technology is one of the answers, lack of familiarity with APIs and security and the rest. So I think there's a little bit of that at play. There's a variety of priorities. This isn't the only regulation that banks and payment providers and card companies are subject to. So there's actually a fair amount in flight. I can certainly say a subset of banks do see this as an opportunity. And I'll use NatWest Group as an example, in that we have been talking about the benefits of API enablement for quite some years. And it's one of those things that everyone agrees is great to do. We've just got to agree when the right time to do it is. And so for us, the regulation's been helpful in that not only has it, driven a priority in funding around API enablement at the bank, we've continued to build. So we've built non-regulated APIs, and those same open banking APIs, we actually use ourselves, the same exact ones, same technology, same channels, for standing up new customer propositions, for connecting directly with our business customers, and for partnering with fintechs. So for us, it's near and dear to our hearts. For others, it might not have been quite the same vision in this space.
Okay, that's. I think we'll pick on Conor in a bit just to sort of talk a bit more about what the bank itself is doing. Kevin, I thought this was a good opportunity to sort of bring you in, as Daniel talked about the sort of developing and sort of customer propositions. You've got a business that delivers in something. So could you give us a bit of a description of how Free Agent is using APIs and what it means for your customers?
Sure, thanks, Naresh. So Free Agent, just to introduce briefly what Free Agent is and what we do. So we are online accounting software as a service, so in the cloud. We've got over 100,000 UK-based customers who use our capabilities to do their invoicing, their expenses, but very importantly, their tax capabilities, including filing their VAT and other tax obligations, and their banking. So banking is, as we know from an accounting point of view, kind of the central part of accounting, because it's money in and out of the business, and then the kind of cash position at any point in time is such an important aspect, particularly for smaller businesses, which, to be honest, is where Free Agent kind of lives from that point of view. We are also, we are actually part of NatWest Group. So we were acquired just over 2 years ago by NatWest. And interestingly to me, to Dan's point about whether NatWest is focused on fintechs and enablement of data and the kind of capabilities that supports, is it was only 18 months prior to the acquisition that we started partnering with NatWest. And one of the first things we did was we leaned into working with Dan and his team to work out how we get bank transaction data into our clients' accounts, because that was the single most important thing we could do for our users, with them to have confidence and robust kind of visibility as to what's going on. Since then, we've kind of moved on to do, Dan touched on this, there's a number of different propositional APIs that we've been working on recently. So we're actually just testing some payment initiation capabilities from inside Free Agent. This is kind of the first time we've been able to do this. And again, this is a regulatory requirement that came through PSD2 with the concept of a payment initiation capability and the APIs that support that. So literally, interestingly, today, this morning, actually, we went live with our kind of beta testing on that, and we're really excited about what that's going to enable for our customers going forward. So that's a really kind of key API for how somebody can run their businesses and can manage their cash position on a day-to-day basis without having to log out of one application and into another, Naresh. And I think that's the way that we, I'm sure Conor and Dan would agree with this. This is one of the things that we really believe APIs will enable going forward in the future, is this coalescing on this convergence of a lot of different financial services into a simpler, more unified platform for people. And that's something that we believe very firmly at Free Agent.
And I guess I can see the sort of benefit for really small businesses, some of the micro businesses out there. You don't need a lot of people to do a lot of the stuff you've been talking about already. But are you seeing it really just focused on the, one person band, or, how are you seeing it moving across that SME space?
No, I think it's I mean, the volume of businesses, I mean, there's an awful lot of very small businesses, and there's an awful lot of very large businesses, or people working for large businesses, but the volume is on the small side of things. I think the point of the ability to move data about, though, is there's many different facets to this from an API point of view. I think interestingly, and I know we spoke about this earlier, but a lot of what we've seen recently is actually bubbling up at the small side of the business, and then kind of percolating up into larger businesses. And I think that's unusual, because normally where the investment monies are spent is at the corporate side, and then it kind of works its way down, trickles down to small businesses. So I think there's an interesting kind of horizon for larger organizations to see what is going on in there. The other thing is this deployment that you can have. We talk about standards and APIs, but there can be quite a lot of vertical specialism applications out there in software that does a particular thing in a particular industry. So rather than having to pay sort of very, very expensive consultants and contractors and system integrators to actually plug all these things together, then we can actually, as Dan has alluded to, with the kind of services, we can much more rapidly and at much less expensively plug all these things together for large organizations. So the kind of API capabilities, that is not a new thing, but it's something that people are really beginning to come alive to, is kind of unlocking a lot of that kind of speed to market and the ability to kind of get faster to solutions that companies will benefit from.
And I know one of the things you talked about was around income smoothing. Could you share a bit about what that means and how you see that being of value to your customers?
Yeah, so I think that it's something we're not doing today, but I think it's one of those kind of use cases that is enabled by these changes that we're seeing in the market. And it's something I think is going to be interesting for a lot of businesses, is when you look at banking and accounting, and I talk quite a lot about these becoming converged capability. So the fact is that you actually, it's money in and out of the businesses where the bank does the bank services, a lot of those bits and pieces, but being able to represent that in your accounts is key. And I am literally paid to talk about this stuff, Naresh, so that's quite good to do, not today, but I think generally. So it is something that's dear to our heart. I think what we can foresee already is a situation where if there are cash positions that you can forecast, and importantly, we've got all the data, we're smart enough to do the algorithms to predict the cash position based on everything we know about the business, by pulling data, by pulling future data transactions, by knowing what the kind of available funds and payment terms of all the invoicing and purchase invoices, etc. So you can see where there's shortfalls. So one of the things that we are going to be able to do is to automate moving money about automatically to either maximize the kind of position of where the cash sits at any point in time, but also smooth out any kind of gaps that people might have in the cash flow point of view. And these again are enabled purely by these PSD2 and open banking concepts of authorized information service and payment initiation. So the ability to see the data and actually move money about automatically is going to enable a bunch of services that we couldn't even have probably even thought about prior to this time. So I think that's quite an exciting time to be looking at this stuff.
And I think it's definitely, I've been a big fan in my career around sort of looking at intra-month volatility and using working capital techniques to try and smooth out overall balances to make best use of liquidity solutions or my borrowing facilities from, banks like NatWest. And it sounds like what you're talking about is being able to pull together quite a lot of disparate, maybe unstructured data into a sort of an environment where actually small groups of people can start to understand and forecast it more effectively. Is that part of what APIs are going to be able to deliver to us?
Yeah, so I think that you can't forecast unless you have a starting position, and you can't forecast unless you have sufficient data to kind of base your hypotheses and assumptions from that point of view. That's just a fundamental point in time. So if the days are that you used to have to, retype something into a spreadsheet, or even go back to the Windcast days that some people might have used, going back to these things, there's an awful lot that we can do that now is intelligent. If we can build self-driving cars these days, Naresh, we should be able to predict what the kind of cash balances are going to be. And I think that similarly, having access to the data is just as the enabling point in that. And that's what APIs do, is they make the data be mobile, they make the data be usable, and they make the data be standard rather than having to, human error of retyping stuff or copying and pasting and all those kind of bits and pieces. And we can build services, we can build platforms. And as Dan said, there's all ecosystems that we can actually develop on top of these things.
So I like your sort of comment around self-driving cars. I guess when they come to be incredibly expensive, Conor, is that something which, as a treasurer, if I sort of start to explore the world of APIs, this is going to cost me an arm and a leg at a car?
Well, I'm not sure it necessarily costs you an arm and a leg. I think when we start to think about APIs, APIs are enablers for particular problem statement that a business may have. And as we start to think about open banking and how APIs can be deployed, what's really important is to try and think about actually what's the business problem statement that we're trying to solve for, and therefore how can the interconnectivity of different applications through the use of an API help to solve for that problem. So, and in that context, when you think about traditional integration across different platforms, historically, that would have typically manifested itself through point-to-point type connections, which can be quite expensive and, more to the point, take quite a long time to conclude. What APIs are now providing is sort of an open standard that facilitates very quick and ease of integration, whether it's between the corporate and its banking partners or other fintech providers, or indeed between different parts of the corporate itself, because this is about connectivity, and connectivity challenges exist within the company as well as between the company and its financial services providers.
And I was going to ask you, how do corporate IT teams feel about, I guess, opening up part of the infrastructure to folks like yourselves to put in these APIs? Do you get a lot of resistance from them?
No, we don't. In fact, we just by way of example, we recently launched Payee, which is an open banking based service. NatWest is the first to market with this, what technically is called a PISP, a payment initiation service provider. This is an open banking based service which allows customers of UK banks, they don't have to be a NatWest customer, but customers of UK banks who can pay for goods and services online without the use of a debit or credit card. And that's, so to bring that to life, if you're shopping online with a participating retailer, when you come to the checkout stage, instead of having to use your debit or credit card, you can immediately make the payment for your goods directly from your UK bank account, and you can choose which. If you have multiple bank accounts, of course, you can choose from which account you wish to make the payment from. And that's kind of a great example of where we're working with corporates, who are working with us to solve particular solutions. So in this case here, what corporates are looking for is prompt payment. They're comparing the cost of an immediate faster payment versus the traditional route of payment by card, which it can be more expensive through commission charges. But also it solves for a problem, a different sort of problem, where corporates are uncomfortable with storing customer confidential information such as debit or credit card numbers, and the use of a solution like Payee allows the customer here, the merchant, to collect the payment without having to store any customer confidential information and all of the data confidentiality obligations that entails. So to answer your question more specifically, when you start to look at some of the particular challenges and the value that APIs can create, what you find is, of course, there's a great willingness by corporates to work with us to help them solve for that. And the use of APIs provides, a recognizable standard through which that can be achieved.
And so, I've spent probably 20 years in industry being sold products by banks. Is your approach and is the sort of flexibility of APIs changing how you see these products coming to market?
Yes, well, I think to build on maybe the point a moment ago, it has to be customer needs led. And actually what open banking is allowing us to do is to address specific pain points that our customers have in very different ways. So if we take the example of the humble check, which has existed for many a year, when you look at the pain point that corporates have today, customers have to issue checks. Perhaps they're undertaking a process of refunds. They issue checks because in the main, they don't have their customers' bank account information. So either it's very difficult to collect that information, and understandably, they don't want to have the task of doing that. And also, they don't necessarily want to store that bank account information because, as I mentioned a moment ago, they're very important data confidentiality obligations with that. But checks, as we know, are quite a cumbersome and costly form of payment. The physical handling of the check, the issuance, the collection, and the reconciliation. Again, open banking standards can provide an alternative means of doing that, and the Payee ecosystem that we've brought to market. A variant of that is something called Send Money, which we're launching to market in the next few weeks. And what that does is it allows customers corporates to interact with their customers for the purposes of processing, for example, a refund. And what the customer can do there is, we'll send you, you will have a conversation with me. We agree that I owe you a refund. And then, I will exchange correspondence with you, or a link with you, from which you can then click through. And that'll take you into your open banking app. And that passes, that gives us the ability then to process an immediate faster payment refund to your account. So your account information is protected. But the APIs that we're using pass the information that's needed between the paying bank and the customer to process that payment. So again, it's a great example of how we can use APIs and open banking more generally to remove quite expensive and difficult pain points for customers, whilst creating a much, much better customer experience, both for the customer, but also for the corporate.
Yeah, I could definitely do with that. I'm still waiting for a refund from one of my travel journeys that was disrupted by COVID, and I've been told the refund will come through 7 to 10 working days. It will be applied in euros to my credit card. I can't remember exactly which credit card it is, so I'm just going to have to wait for the statement to come through. Which is,
yes,
yeah.
Whereas with the API solution I've outlined, this is the ability where we can have a business, B2C conversation and agree the refund, and then affect that refund immediately by sending you the link, and then we use the API to initiate the transfer. So you get your money back straight away, and from the corporate's perspective, the refund is processed and it can be reconciled real time, and the case closed.
And so I guess with people in regulated businesses, it's really good around gaining control over customer monies, being able to allocate them, both the money in and money out. I mean, I can see an application for that where you've got businesses with a lot of refunds. A lot of treasurers don't really get involved in that side of the business as much as other bits. Have you got any sort of other areas that you're looking at from a treasury specific perspective?
Well, again, we perhaps an example of something we did more recently with a large public body who required our help for the processing of large volumes of transactions, and the concern here really was around prevention of fraud. And more as an industry, we've recently rolled out something called confirmation of payee, which some people today at the conference would be familiar with. But this is really a matching process between the beneficiary name on the bank account versus the sort code and account number given. So it helps to protect. It's an anti-fraud measure and provides assurance to you as the payer at the point that you're making the payment. It does the check of the beneficiary name to the bank details given. And a large public body asked for our help because they had to make very high volumes and values of payments during the COVID period. And over the period of probably 2 to 3 weeks, we very quickly put together a solution which was based on API technology, and actually able to implement the technical aspects of it within a matter of days. And probably since the middle of May, we've processed something like 5 million transactions for them, and been able to check something in the order of 30 transactions a second. So again, it's kind of a more specific use case of where you can bring in an API to help a particular corporate solve a particular problem that they have. And it comes back to this ease of connectivity point, where providers in the market, such as ourselves, have particular capabilities, which through open banking we can now expose to our customers. to help them with a particular issue they have, whether it's fraud prevention or immediacy of payment or reconciliation. Because this is about provision of payment instructions, and it's also about the provision of information.
And I guess, I mean, you bring up a good point about confirmation of payee. And I guess part of what I'm taking, because it is going to get rolled out, it is being rolled out this year. And just so I understand it, this is where when you type in a beneficiary name, you can get different types of responses back as it tries to match specifics around who actually owns that account. Is that right?
Yes, that's right. So whether you're a personal customer or a commercial customer, if you take a personal example, if you asked me to send you some money and I hadn't paid you before, so you weren't set up in my banking app or my online banking platform, and you would exchange with me your bank account details. When I go into my banking app and I put in, pay £50 to Naresh, and this is Naresh's sort code and account number, what will happen is that when the payment instruction is routed to the bank will perform a matching on the sort code and account number quoted versus the name of the account. So if the name of the bank account matches the beneficiary name on the payment instruction, the confirmation of payee service will confirm that as a match. If the information is incomplete, because if we take the example that you might have used C rather than Conor when filling out you can get what we call a partial match result, which tells me that it's quite possible that the beneficiary account is the same as the details quoted, but it's a prompt for me to be extra sure that is the right and the same account. So I might contact you to say I'm getting a partial match, and you should say, well, did you put down C or did you spell out Conor? Or if there's no match of any details, then you'll get a no match result. And that provides assurance around when you're making payments to third parties. And I think we're all aware of the potential for scams that come in by email and so on, where you're asked to send money to Joe Bloggs at this detailed bank account, using bank account information that doesn't match the beneficiary detail. So it's an added protection.
So I guess, the example I always used to give people when I worked at PwC, you could make a payment to PwC and it may come back as PricewaterhouseCoopers LLP, and you'd need to check whether that was genuinely where you wanted to make the payment. And I guess given that, we're going to have a lot of people listening to this who are going to have master payment vendor lists running into probably tens of thousands of companies. In the old days, I guess they'd have gone through, maybe rung the supplier and said, can we just confirm these details? But you're talking about using, I guess, part of what I'm taking away is having conversations with folks like yourselves or the banks that we use to see whether these APIs and other technologies can help fix these particular use cases rather than, try and fix it myself.
Well, exactly. So I think, first of all, to just emphasize with the confirmation of payee capability. So there's no impact for customers whom you already pay on a regular basis. So if you have payees already set up in your banking infrastructure and you've been paying them in the past, you don't need to pass a confirmation of payee check, because it's a given that because you've paid these beneficiaries in the past, they're trusted beneficiary details, and therefore there's no reason to perform further checks. So it's really only the case of when you're making a new payment to somebody for the first time, and once you've made that payment for the first time to a new beneficiary, all subsequent payments don't need to be copy checked. So the important thing there is communication, just being clear on invoices, or when you're exchanging information with your customers, is being very clear what narrative they should use to avoid any confusion. But I think to your broader question, Naresh, yes, it's really about one of the things that we're very keen as we roll out our Payee ecosystem, for example, as one example of where we're participating in open banking, is working with customers as we go, because there's a lot to learn as we go, and we take the feedback from customers actually around what's working for them, what are they discovering through the journey, what are their customers telling them about the open banking journey, and therefore how can we continue to iterate. So, for example, one of the things we'll bring out in open banking a little later is the capability to do refunds. So that's something that our customers have told us is a very important part of the Payee journey.
And I want to sort of, I'll bring in Daniel here, and then I'm going to go to Kevin. Daniel, what's this meant in terms of how you and the bank have sort of thought about customers maybe differently, and how you sort of pulling together these sort of propositions and products?
That's a great question, and clearly Conor brought up a few great examples of some things we're doing to fill customer needs, whether it's alternative mechanisms of merchant payments, refunds, and other ways to help our customers. I think more generally in the open banking space, it's probably important, particularly for treasurers, to recognize that open banking isn't just about regulation and what banks were required to expose as part of that regulation. That was hugely useful, by the way, because effectively it's created almost a petri dish of experimentation in openness, in APIs, into interconnectivity. So we can look at that and say, yes, it is possible to open these channels. Yes, it is possible to use them securely. We've had something on the order of 800,000 customers use open banking at least once. We see about 100 million API calls a month. And those aren't just generated from third parties who have services that complement ours or seek to compete with us. It's also from our very own propositions that use those channels. But I think, again, what's important for the corporates is, well, open banking maybe wasn't exactly targeted at the corporate market. Clearly, personal banking customers and small businesses were the initial target of this. And I think it's only natural that when we see, venture capital money flowing into fintechs, it flows into where fintechs serve the masses. So it's normal that would be the early use case. But stepping back from that, it really is about open banking more generally. Leave the regulation aside. It is about interconnection. It is about treasurers recognizing that they can become part of that interconnected ecosystem where they can connect directly between their platforms, their machine learning, some of their AI, cash flow management, connecting directly with liquidity providers, accounts payable, accounts receivable providers, foreign exchange providers. Oftentimes they're banks, but also competing pools of liquidity, whether that be peer-to-peer and other fintechs. And you can really create something quite unique, and not just on, if you will, the supply side of treasury, but also those corporates that our treasurers are part of. This extends out to their customer base as well. And there's some incredibly powerful use cases, whether it's the simplicity of reconciling payments in real time, which has benefits both on the funding side and the operational side. As Conor and Kevin had mentioned, a lot of action in there in terms of cash flow smoothing and other opportunities in that space and payments. And more generally, just thinking about how do we create a modern company? How do we create a modern treasury by taking advantages of this interconnectivity? And how do we as treasurers become more demanding of these scenarios? And so we're seeing quite a bit pop up. Again, much in the way of small business and individuals, but even from a corporate perspective, I'm thinking in terms of, again, that real-time transfer of funds, competition to card schemes for merchants, like the Payee proposition that Conor talked about, customer authentication, leveraging these open banking channels to authenticate customers of the corporates. It's a great opportunity. We're working on a few of those. Inline credit. So one of the things we're working with the likes of Free Agent and other accountancy platforms on is to provide our customers with liquidity when it's most relevant to them, rather than an entirely separate conversation. So as our customers are doing cash flow management within Free Agent, for instance, they can see if there's a line of credit available to them and actually act upon that in near real time. And that's a great opportunity, and it's very relevant to customers, particularly now when cash flows is absolutely critical. And I can see that escalating or elevating up through small to medium size and into larger corporates. So I see a whole variety of great opportunities out there, Naresh.
Right. I'm going to bring Kevin in now. So, Kevin, I've got a couple of different questions. One is, we talked a lot about technology, but I think there's a human element to this as well. A lot of the folks listening in aren't treasurers. They don't have treasury functions, but they still do a lot of what goes on, whether it's FX or banking or reconciliations or payments. So they're still doing, treasury type activities. How do you see what you're providing around having to create treasury functions as a sort of standalone part of an organization?
So I think, well, as we've said at the beginning, we're more focused on these smaller businesses, up to 10, 15, 20 employees, but there's a lot of them about in that sense. And I think the space that you can create for people to fulfill the right kind of functions, the forward-looking functions for the business, if you abstract out the day-to-day mundane reconciliation, as Dan said, bank statement import, all of those different bits and pieces that APIs can bring into play in that, then we can actually serve up these kind of more insight-led messages and kind of more kind of forward-looking views of a business that allow people to actually perform these functions like treasury functions. You don't do that passively, you do that proactively, but you need to have access to all the relevant information and in as much real time as you possibly can. But for smaller businesses, I think it's difficult sometimes to get the space to actually focus on these bits and pieces because there's so much in the day that you're having to do. So we've been, FreightAgent's 13 years old now as a business. We were one of the first crop of cloud accounting applications that were out there. We sort of were formed around the same time as this became a capability to do on that. And it's actually, we've been working on getting bank data into the FreightAgent application as a kind of core component. As I said earlier, that's such a fundamental thing of how you know the health of your business and the cash and the liquidity position of your business at any point in time. So the more we can do to automate that process, the better for our customers. So we've actually just launched the first iteration of a machine learning application that actually does a lot of the reconciliation automatically. So it's actually able to look at our entire data set of 13 years of what transactions have been categorized or reconciled to. So we can use that learning and feed it into a machine, a very clever piece of technology that then from the first pass of a bank statement being imported into FreightAgent, we can make a very, very comprehensive and a very confident estimation as to what all of the different transactions are against that. So we can start building accounts and actually looking at forecasting patterns and behavior sort of immediately from actually a new customer coming on board and using FreightAgent. So things like machine learning and artificial intelligence, these are great. And these are again, phrases that people hear a lot of these days, and they're bandied about, APIs and machine learning and whatever. These are actually coming true now. These things, though, I think it's important, Naresh, to think about the fact these will really be powerful when people don't talk about them. They just are, and these things are actually powering what we're doing on a day-to-day basis without having to consciously go and look for them. Then that's when these services like FreightAgent, like the services that Conor's spoken about, that Dan's talking about, what is going to work all the way up to the corporates. I think it's when these things take away those kind of layers of administration and process that allow people to actually focus on these higher level functions, like treasury. That's what's going to support a lot of businesses, even at the smaller side, to be able to do that.
Okay, that's brilliant. And Conor, picking up on one of the things Dan was talking about getting more insight around supply chain. I know that during this pandemic, I and my colleagues in the ACT, we've spent a lot of time talking to treasurers. A lot of them are sort of mid-sized and large-sized corporates. They're pretty confident about their own liquidity, the survivability of their own business. They have real concerns around their supply chain. And I wonder if as we start to look more around supply chain, you think APIs will help support that. Either if it's a big company being a customer of mine, or it's a small company being a supplier to me.
Yes, it's a good question. I consciously used the term ecosystem a few moments ago when I was talking about Payee, because I think that's really what open banking is creating an ecosystem of interconnectivity. And I would sort of summarize it as really two components. One is about passing information, and the other is about payment initiation. They're the two real components of open banking. And in the context of wider supply chain, I think what APIs can facilitate is faster line of sight through the supply chain. So in a very simple context, just around having a payment. So if you take, Kevin has talked about activities happening in the SME space for it as one example of interconnectivity through open banking. If I take the example of a larger corporate, the role of treasury versus perhaps credit control. So today, actually, companies might slow down their shipment of goods because they don't have a good line of sight as to when the end customer has paid on their account. And of course, once you get payment on account, you can reset the credit limit, and then you can start to ship goods again. And for some corporates, that can be quite a complex process because of that lack of visibility. Whereas with an API, if you can get that information passed through quickly once the customer has initiated the payment and your confirmation of receipt, and you can interconnect that into your credit control system. Actually, what you can start to do is to increase your velocity of trade a bit more quickly because you have that line of sight. But I think also as you start to think about perhaps financing solutions, once you can you use APIs, for example, to drive connectivity that once a customer has been invoiced, that they accept the invoice as it is, and you start to separate the credit performance from the physical payment, and then perhaps start to think about financing solutions. And again, how can you use APIs to build that ecosystem together to provision working capital capabilities?
Okay, that's brilliant. We've got about 15 minutes left. I've got some questions, so I'm going to go straight to those. One of them is around, says, this seems to be a lot of what's going on in the UK. How global are these solutions going to be? And what's your view on when standards will start to coalesce, as you mentioned earlier, Dan? I don't know if you want to take that.
Yes, I suppose I'd be more than happy to, and it's a good question. So I think, and we touched upon it very briefly earlier, but open banking as a concept is global. Europe, and including, obviously inclusive of the UK, have taken the lead with things like PSD2 to kind of force the issue, if you will, of let's open this up, let's add competition, let's drive innovation. I think that's a really good step. I think as we move around the globe, we see different approaches to it. So open banking is near and dear to every developed market. Depending where we go, as an example, in Australia, they're starting with consumer data rights, which is a fairly different view than we have, but inevitably it'll come together into this open ecosystem. In Singapore, it's more like what we're doing here. I think in the States, patchwork of regulators, there's more of a let the market decide, but we're starting to see some of the largest banks in the States opening up APIs for benefit, well, for commercial benefit, but realistically for the benefit of their customers as well. A lot of agency banking relationships with large incumbent banks are now sitting on APIs. So I think there's a lot at play. In terms of that global standard, I don't think we're going to count on a global standard anytime soon. I think the question is, are there fewer standards, or are there some players out there that'll emerge that'll help normalize that? And I think the players normalizing it is all but guaranteed. I think if we take a look at the likes of Visa, traditionally known as a card player, they made a $5.7 billion investment in Plaid, a fintech whose sole role in life thus far is to provide connectivity across different bank standards. So I don't think that that standards thing will be necessarily the issue. Eventually, for payments at least, we'll see that ISO 20022 help to normalize things. But I think we can probably, to an extent, ignore it, as there are fintechs who are making this their lifeblood. So I think that it's just a question of a little bit more time. But again, even within the European context, just connecting with a bank via API can provide access to a global financial ecosystem, because those networks for us are already in place.
And I mean, you picked on sort of large developed economies. What's going on in some of the other economies, Brazil, India, China, parts of Africa, are they also using APIs and opening up their banking systems?
Great question. I think that absolutely yes, and it would be an oversight to disregard that. I think Brazil, for instance, is very, very strong on this. In fact, the Brazilian regulators and banks come to see us frequently to ask, observe, and learn. So I think Brazil is not far behind in wanting to drive this type of scenario. Some of the smaller countries, Israel is very interested in this. They all have a little different place in mind, whether it's solely we want to be the most innovative banking system in the world, or in some where you have a legacy of banks, we want some more competition. So we're definitely seeing that. In Africa, not quite as much yet, but we've had a few calls from the Middle East talking about how we could partner up on API propositions. So I honestly do think it'll happen, and I think it'll happen not because of regulators. I think once we get past a kind of critical mass, I think customers are going to demand, large corporates are going to demand, I'm not going to bank with someone unless they can provide me with real-time instantaneous connectivity. I'm going to choose to partner with fintechs and banks that can help me in ways far beyond open banking. ID verification and KYC of the corporate's customers, authentication of those customers, adding additional data that's not part of open banking. We've had a variety of requests for that as well. So I think it's going to build up. And naturally, I think in all countries, banks will respond. As long as there's a competitive market, banks will have no choice but to respond, as will fintechs. And if they don't, there's plenty of others who might want to step in. So I actually think this will build up a fair amount of inertia, if you will.
So I guess irrespective of, how evolved the open banking and API environment is where you are located, it is going to happen, the next 2 to 3 years is going to hit most countries in one way or another?
I think so. I mean, some of the more advanced capabilities might take just a bit longer, but I think over the next 2 to 3 year horizon, we're going to hear a lot about fintechs, banks, corporates, all interconnected in real time, seeking better customer and shareholder outcomes. I honestly believe that.
I think the other thing, Dan, it'd be fair to say that helpfully the regulators are communicating in these different territories as well. So I think the competent authority, the FCA is actually, we're a bit ahead of that, but they do speak. And I know that, Dan and I have been on, similar engagements and speaking to organizations where we kind of F data and people like that, where who are organizing these things. So good ideas tend to travel quite quickly, Naresh. So I think that's another point that happens with regulators can see the benefit of this doing this, but sometimes that takes a bit longer to work its way through, doesn't it? Because regulation is involved. But I think that's a helpful component to what Dan was referring to in the different countries' wider need.
Okay.
And open back. So I was just going to add, I think also that there's a point that we look at open banking in the UK, it's still a relatively immature development, and the industry is learning as it is progressing. And I think, as you touched on earlier, Naresh, I think consumers will also demand more of it over and above what regulators are looking for. So you start to think about consumer protection for open banking initiated transactions. You start to think about AML. Will banks do banks have a consistent approach to it? And how do you make sure that the journeys remain frictionless whilst trying to balance all of those competing demands?
Okay, so I've got about 5 questions. We've got about 5 minutes. That means, by my maths, about a minute per question. Question 1 is around cross-border payments. You talked about different API standards, and we know there are different rules across different jurisdictions. Where is open banking sitting around cross-border payments today, and I guess in a couple of years out?
So cross-border payments are part of the regulatory requirement in Europe, for sure. Any type of payment that one can make from a payment account is included there. So those are certainly part of it. I think more interestingly, we'll see a variety of banks. I know ourselves, we've got some strong propositions such as currency pay and FX micropay. So in the corporate space, we have more bespoke APIs to truly provide some unique capabilities, whether it be things like FX micropay, managing large amounts of small payments, or some of the most competitive rates in cross-border. So I think it actually is going to create an even more competitive market through that kind of connectivity. But certainly cross-border payments are there.
Okay. Maybe one for Conor. What's the incentive for consumers to pay more for goods and services via open banking versus traditional methods like card, PayPal?
But I think it depends on the particular transaction itself and what the customer journey looks like. So I think for consumers, it's all about the customer experience as well as the price. And we know through our own lives as well that often we value the experience over the price of the underlying commodity, and are happy to pay a premium for that. And I think that's where open banking and APIs could start to play a role, as you start to bring much greater integration between the underlying commerce, if you like, the underlying business transaction from the payment itself, which hitherto they've been sort of two separate activities, whereas actually now they've become a much more integrated, seamless journey, which can provide a really good customer experience.
And I'd add to Conor's point that the potential for lower cost for the lower cost for merchants ideally will flow through to customers as well. And as a consumer, like all of you, it might feel just a bit better not to leave my credit card or debit card information around and other identifying details, because in open banking, I authenticate with my bank that it's okay to initiate that payment. So I think that's nice to have as well, in addition to the major points that Conor's made.
Yeah, the peace of mind over your data security, the fact that there's no risk of that being compromised. I think the fact that you can get paid immediately rather than having to, back to your example, Naresh, of waiting quite a long time for your holiday refund. If you had the ability to trade with somebody who actually could give you an immediate refund with value, you might value that from a premium perspective.
Yeah, no, I would. I also apologise for leaving this last question to the end, because I think it's really important. A lot of treasurers out there use a treasury management system to consolidate and aggregate a lot of their data. How are you folks in the bank working to integrate with third-party technology solutions like this, where treasurers invest a lot of time and money?
So I might take an initial stab at that. So I think it comes back to the integration point and the fundamental shift here. I think I touched on it at the beginning, right at the beginning of the conversation, is that when you start to look at third-party relationships and integration into your treasury management system, historically they've been quite technology-heavy, point-to-point type integrations, whereas now what we're seeing through open banking and the use of API standards is that it facilitates a much faster and easier type of connectivity. I gave the example during the call of the public body we're working with, and for whom we've over the past few months performed just over 5 million confirmation of payee checks. That was a technical integration that was completed in a matter of days, with the end-to-end conversation taking just a matter of weeks. That's a great example of how you can use APIs to try and join up different technologies to drive a really good outcome. Okay, that's brilliant. I'm going to sort of ask now for sort of final thoughts and comments and bits of advice for treasurers out there. I'm going to leave a couple of things out there. One is a question around how can SMEs benefit from open banking and open finance? And I guess one other thing is, if I'm a treasurer listening to this with some broad idea of what APIs are, what do you think I should be doing tomorrow in terms of thinking about what I want to do? You've talked about how brilliant it is and, it's very flexible, but what do you think I should be doing tomorrow? So can I just leave you to think about those questions as we give you 30 seconds or a minute to round up the session?
I'll start, Naresh, with the SME question, I suppose, is the open banking, open finance. So open finance, we touched on this earlier, but I think it's broader than just banking. And the whole point of this is data mobility in a number of different directions, whether that be insurance information, whether it be investment information, pensions, all of those kind of bits and pieces. I think we're really cliche, watch this space, because we're only just getting started with this stuff. And I think the mobility of that data, the power that's going to unlock, and the competitive nature of that is going to put the power in the hands of the corporates, to actually decide who they want to work with and that's going to work, and that will support those. So that'd be my take on that.
I'd throw in a comment maybe that I think I've kind of shared a few examples of where we as a bank have brought some really good open banking based services out to market, but equally we've responded to specific customer challenges that have been presented back to us, and how we've used open banking to devise quick and safe and real value add solutions. So I suppose the takeaway really is to think about actually what is the opportunity that you're trying to solve for, and come and talk to us, because open banking is iterative. It isn't a specific set of solutions. As we've heard today, there are lots of different applications in terms of how you can use open banking. And as open banking sort of continues its migration towards a broader open finance capability, really important that corporates and banks are talking together and working on solving particular needs.
And Dan, the last word from you.
Thank you. I think three things really. One, continue to think about and revisit what it feels like to be a corporate in whatever business you're in, and a treasury function within that business, into a fully digitally interconnected world. Continue to think about that and revisit it. And more to the point, I'd say be more demanding. Be more demanding of your software vendors around interconnectivity and real-time connections to banks and payment networks. I think that's critical. And I also think be more demanding of the banks that you're working with, those that are open and can offer not just what's out there from a regulated point of view, but can work with you, as Conor had mentioned, in developing new functionality that's an enabler for you and your customers.
Okay, that's great. And you took one of the things I was going to end with, which was around be more demanding of your banks. And I guess that applies to whichever country you're in and whoever you bank with. And I guess however ready they are for open banking, because as you said, and as I've taken away, it's a journey for everyone, for us as consumers, us as corporates, but also for you folks as banks, and for people like Kevin as sort of software providers. And so we presumably should be challenging banks to understand what their own roadmap is, and how we and our needs fit into that roadmap, and make sure we're ready. I guess couple of other things that I've sort of taken away from this and other sessions. One is to talk to peers if you're not sure around how APIs work and how to use them. And we've heard from Dan and Conor and Kevin, they're not particularly expensive to deploy, but sometimes we don't always trust what a banker tells us. So, I would say, maybe talk to other peers, talk to Conor and Dan about who they say have deployed APIs, and get a sense for yourself of how they have been useful or not useful as you use them in your own organization, or think about use cases. And the other thing that I've really taken away, Conor, from what you said was, rather than looking at a big transformation, maybe look at some of the small things that irritate me and try and work out how you as a bank can provide a solution to that. Are those all fair comments?
Yes, I mean that's a good way of looking at it, and I think when we all look around our organisations, we can see where we spend disproportionate amounts of time, perhaps engaged in relatively low value activity, and I think that's really a great place to start if you want to start to experiment with API capabilities and how you can start to get yourself on that journey, as well as some of the bigger use cases I outlined earlier.
Okay, well, that's brilliant. Well, thanks very much, folks. I hope you've got a better understanding of the role of APIs. I certainly have continued to learn more around what they do and how they can be used. For me, I see them as a really useful widget that gives treasurers more control to customize the types of data they want, how it can be displayed, and support the needs of the business and the board. Thank you all very much for your questions, and we'll continue. Please feel free to continue discussion on the discussion board. You can chat directly with attendees. Please provide feedback. And if you missed this session for any reason, you can listen to it again. As I said, there were some bloomers in it, so send a note of which ones I got wrong. And also, just final words, thank you very much for joining us today, and enjoy the rest of the festival. Conor, Dan, and Kevin, thank you very much, and thanks to NatWest for sponsoring this session. Have a good afternoon.